When would you say a C Corp structure actually makes sense from a tax standpoint?
Okay, if you're a startup and you're trying to prove a concept, and you're not profitable and you're never taking money out of the company, you're only putting money into the company, then a C Corp is just fine. Where C Corps are terrible is if you're a profitable company and you're using that money that the company makes to, live on or fund your life, and you need to take money out of your business. If you never need to take money out of your business, then a C Corp is, and you're not profitable, then the C Corp is just fine. That's like startup situations sometimes. Also, in that startup category is if you're going to attract equity investments from lots of people, you need to be a C Corp. S Corps can only have 100 shareholders. If you're going to attract investment from, I heard a little echo there. If you're going to attract investments from pension funds and joint, equity, investors, they're not just individuals, then you have to be a C Corp because S Corps can only have individuals as shareholders. And if you're going to have investors that are foreign, non-U.S. citizens, then you have to be a C Corp too. S Corps can only have U.S. citizens or green card holders, and they can only have 100 shareholders.
Mm, you really explained that clearly. I like that. You mentioned, let me ask you, Darren, what are the biggest risks or downsides of choosing the wrong entity structure?
You mostly just pay more tax if you're the wrong entity structure. Um,
Mm.
that's when you're an operating business and you're making the kind of income that's subject to self-employment tax. If you're being taxed as a partnership or a single member LLC, then you're going to pay self-employment tax. You're just paying way more tax. It's usually the bigger part of the tax that people pay. It's more than their federal income tax even. That's the biggest reason to choose the right entity. The other one is if you're a real estate investor, that kind of income is not subject to self-employment tax. It's rental income's not subject to it. So there's no reason to be an S Corp. In that case, you definitely don't want to be an S Corp. You want to be a partnership because you want flexibility. Might want to take this piece of property in or out of the partnership, or a new partner might want to come in or leave. With partnerships, they're very flexible. You can have a tax-free way to take new partners in and tax-free ways for old partners to leave, and they can take an asset with them. And, you can do lots of flexible things with a partnership. And so when you want flexibility, especially with real estate investment, partnership is the way to go.